Welcome back. Let's get the management of IndiGrid on trading hour now. The company recently over the weekend concluded a 4,000 crore rupee acquisition of Virescent Renewable energy. The board has also separately approved a 1,500 crore rights issue. To talk more about it, we're joined by the CEO of the company, Harsh Shah. Harsh, thank you very much for joining in. You have indicated that this will add 16 solar projects with a capacity of a little more than 500 megawatts. But in terms of the overall top line, how much will that add? What are the long-term PPAs in place? And how did you arrive at that enterprise value?
Thank you. Thank you for having us. This will add around 18% on our top line. And in terms of the residual life of the contracts, it's approximately 17 to 18 years PPAs are left. And the projects have over 7-8 years of operating history. In general, in the sector, there's around 25-year PPAs outstanding. But because these plants have lived through the life for 7-8 years, so we will have residual life for around 17 to 18 years. In terms of the valuation, I think easiest way to look at it is an EBITDA multiple, which is an easier conversation. And we are somewhere in the range of 7.5 to 7.75 EBITDA multiple. That's the multiple at which you've acquired. Well, that's not the only parameter. We run a DCF for future cash flows and how it adds value to IndiGrid cash flows. But I think the simpler one is to look at an EBITDA multiple.
Okay, you said 18% it adds to your top line. Harsh, can you also take us through, how you will be funding this? I know it's through a mix of debt, equity and internal accruals, but could you split that for us and give us the exact mix?
Sure. So we plan to raise around 1,500 crores of equity, out of which around 400 crores is already we have issued notice for preference issue, which we are issuing to large family offices and marquee clients over there. And the residual one will raise it either via further preference issue or qualified placements or rights issue. We are evaluating all those routes right now. And the rest of the capital, other than 1,500 crore, has been raised by debt. Out of them, there are two large long-term institutional borrowing that's already taken place. One is funded by IFC, International Finance Corporation. They funded around $200 million out of this, so around 1,650 crores with an 18-year tenor. So it's an extremely long-term bond that's done. And this second bond for IndiGrid with IFC. The first one happened in April, which was similar tenor. And the second large financing that is done is from IIFCL, which is again a long-term borrowing that we have taken. So between these two, majority of the borrowing that we have done is extremely long-term.
Okay. You mentioned, Harsh, that it's going to add 18% to your top line. That's from this year itself? I mean, immediately, I'm guessing?
I mean, this year is part-year consolidation. So it won't add exactly 18% for this year because it's going to be around nine months of consolidation. So it will be relatively lesser for the year. Yeah.
And what kind of assets are these? What are the PPAs like? And I'm just trying to understand sort of the strategic thought process behind it and whether we'll see more of these acquisitions from IndiGrid, with respect to other trusts. I don't know if there are too many such trusts in the market at all to begin with.
Sure. So the assets are housed in the trust and therefore we are acquiring, I think, what eventually we are interested in buying the assets. These are solar power projects with around 7-8 years of operating history with strong counterparties. Majority of them are SECI, NTPC, which are the central utility counterparties for us. And that's our business. We acquire projects with strong counterparties. And as I said, around 18 years of PPA life left. So we look to fund it for next 18 years and earn yield out of that. These are solar projects. So essentially, these are run from the energy of sun, converts electricity, and we sell to the utility clients.
Will you be doing more of this? I mean, this is not a small one. It's 4,000 crores, not small in terms of managing the payouts, etc. But is this a route that we will increasingly see IndiGrid follow to simply sort of buy off more such trusts which house the assets that you would want to have?
Oh yeah, certainly. I mean, we are neutral whether it is housed as a corporate entity or a trust, but our business is built on acquiring projects and acquiring businesses, and therefore we would continue to look for acquiring more such assets.
more such assets in the renewable space? Because I think with this acquisition, your share of renewable goes up to, I think, 17% is what you had indicated in the last interview.
That's right.
17% then. But, there is a risk associated with this diversification, right? Solar power per se is subject to the weather conditions. So when you make acquisitions, will it be in the renewable space, or you're comfortable with a 17% exposure?
So we are neutral between renewable as well as transmission. However, what we are guiding is that renewable will not cross 25% of our portfolio. And therefore, there is still around 7% amongst that, which has depending on the tariff PPAs, we can do another 0.5 gigawatt type of size in renewable. So we would look to do that. And eventually we are value buyers. We need to make money out of that. And we evaluate cash flows for each asset. And if it makes sense, then we are okay to do transmission, which is going to be majority of our business, as well as renewable projects.
Harsh, just very quickly before we let you go, I think you're also looking to do 1,500 crores of a rights issue. What's the progress on that? And, how much are you willing to dilute as you raise more capital? What's the capital raising plan?
Yeah. So we haven't spoken about the rights issue. I think there's an error. We have talked about 1,500 crores of QIP because that's what the approval is taken for. Rights doesn't need approval, but we are evaluating rights issue as well. We will look to raise approximately 1,500 crores of equity via a mix of preference, QIP, and rights if required. So.
Okay, got that. Harsh, we'll leave the conversation here for now. Thank you very much for joining in. Need to slip into a very short break. On the other side, we'll put the spotlight on the Indian banking sector in our special segment, FinStreet. Stay tuned.